Hello, everybody. Welcome to the National Real Estate Post, the NRP Daily, and I'm here with our good friend David Stevens. And Dave, I'll just get this teed up for you, and you can take it away. You recently put an article into Housing Wire where you brought up the United Wholesale Mortgage Quicken battle, and you pointed out something very interesting. And then you subsequently sent me another article written by Max Trujillo, dovetailing or supporting what you were saying in your article, which is that what maybe hasn't been taken into consideration until you've brought some light to it is the fact that this type of a move that United Wholesale Mortgage made could wind up impacting minorities and could violate some fair lending rules and guidelines that we have here. Can you expound upon that for us and tell us what your thoughts are?
Yeah, I mean, so just at the outset, as I said in my article, I have great respect for Matt Ishbia and what he's done with United Wholesale Mortgage. I've been amazed at the incredible growth of that company and seen it go public. And I watched the photos of him on the New York Stock Exchange ringing the bell. And I wish nothing but the best for Quicken, for Fairway, for Guild, for CMG, for you name it across the country. This country does really great when it's competitive in the mortgage industry. In fact, just for us to harken back a bit, there was a time when we were all concerned that the big banks would dominate all of mortgages and the GSEs were giving sweetheart deals and the MBA wasn't doing its job fighting for equality and all of these things. And the argument has shifted successfully to say this nation is far better served by a highly competitive industry. I will say though, given that, I honestly believe that this war that has existed primarily between UWM and Quicken, and I'm not sure who instigated it, I have my view, is unhealthy. And I think this wholesale lender, this trying to separate and create pitched battle in camps, this isn't a basketball game. It's not a football field. This is the mortgage industry and their consumers at play. And, I wrote an article because I don't originate loans anymore. I don't run a lending organization. I speak from a seat of relative neutrality, but I have been a regulator. I've been in housing policy for the most recent, decade or two of my life in key seats. And I just find this completely unhealthy. And so, at its core, forget the fair lending piece for a second. This is just bad business. I mean, the mortgage broker philosophy, I ran wholesale for a big company. The philosophy that I appreciate and respected with mortgage brokers, I've spoken at their conferences over and over again, is one, it's a scalable business model. It doesn't have excessive overhead, so it can grow pretty rapidly when markets are good, and that's positive for consumers. But they represent multiple lenders and provide choice. And I get that not all brokers represent all companies.
Right.
But to have a contractual exclusion from one of your wholesale lenders telling you as a broker, you can only use me if you don't use company X and company Y is, a really odd constraint of trade practice that I've never seen in our industry ever. And I've used examples and I used them in my article. Imagine if American Airlines said, you can fly on my airline, but you can never fly United, or I'll charge you a several $1,000 penalty every time you do. It's crazy. And I get the competitive juices that exist. I know that the leaders of many of these companies are former athletes, not just UWM, but others. And I get where that comes from, but this is an industry that has made ridiculous amounts of profit over the last year and is having a great quarter, this first quarter, and yet has an obligation as well that involves a lot of regulatory and legal oversight, which includes that fair lending point that you were making just a moment ago.
So let's talk about that, the fair lending side of this thing. It's the current administration is very, very focused on racial equality in all areas, as they should be, right? Housing is certainly a big part of this, and a big part of it with respect to the new administration. Do you see that there could be some sort of, if you've got a borrower coming to a mortgage broker, and that, borrower is trusting the broker to deliver, to them the best thing possible. And you're dealing with a broker who's agreed not to do business with a couple of companies. Should there be some sort of disclosure regarding that? Should there be some sort of, to be fair to the consumer? I mean, let's talk about the consumer.
Yeah. Well, the short answer is I don't know how regulators do not ultimately begin looking there. There's a well-known settlement. Those of us in the industry don't pay a lot of attention inside the Beltway, but unfortunately I do. And there was a settlement a couple of years back with a large wholesale lender, headquartered out of California. And it was a discrimination settlement with the CFPB. They were issued a CID at one point and had to show impacts to minority borrowers over whites. And what they at least concluded and forced a settlement out of the wholesale lender was that the brokers that were sending them loans, the loans had higher rates on their black borrowers than they did on their white borrowers. And that's where the penalty came from. Now, I'm sure I'm not giving that full settlement the credit it deserves, but that was the gist. And the reality is that not all wholesalers provide the full credit exposure to the marketplace that allows a broker to meet the needs of their market. So let's just take a simple example. Let's suppose UWM doesn't allow manual underwrites on an FHA loan. I don't know if they do or they don't, but let's suppose they don't, or they don't allow manuals without a whole bunch of overlays. And you get a borrower in who needs manual underwrite. It's a refer, and they need to be able to get a manual underwrite approved. Suppose that wholesale lender happens to be Fairway or Quicken, and they actually have a program for that, perhaps. And they can do it. Now let's add the fact that your borrower is an African American or a Latino or whatever is considered a protected class in the borrower population. This exclusion, if the broker had to abide by it, and many who have signed these agreements, could end up not by intent. The intent of the broker is to follow the obligations of their wholesale lenders, and they in their own mind view that they need to do business with UWM perhaps today as more paramount to them. So they're willing to forego doing business with these other two lenders. But if they cannot get that loan done, and they end up either charging a higher rate or declining the loan, which is also something that regulators will look at, then they end up doing a disservice. And Frank, after writing this article, I don't dip my toe into the broker space a lot, but you always get a quick response. So I ended up I've gotten lots of emails. The majority, by the way, agree with my article. Some who are UWM loyalists have also written me in a professional way, but they've tried to defend the policy. In reading the defenses of the policy, my response to them always is, yeah, but wouldn't it be easier if they just never put this in place? Wouldn't it be easier for you? And ultimately, if there's a shoe to drop, whether UWM gets brought under some sort of regulatory look, or suppose either Quicken or Fairway sue UWM over this policy, or whatever, all these possibilities that can happen where the big money on the table lays. For a broker, the financial exposure of a discriminatory, of a discrimination lawsuit or regulator judgment can be really costly. And my only expectation here is, I'm not saying anybody does anything. I know none of the wholesale lenders per se discriminate, but some have tighter credit boxes, choose to work within a better credit element for efficiency and other specific reasons. And other wholesalers will have a broader net, allowing brokers to fulfill more of the needs of their community. And I just think all of this, frankly, stinks. I think it was bad policy. And frankly, whether you can defend the fair lending concerns or not, you won't know until you have to deal with it.
Right.
We've all been talking about UDAP application that's been used after the fact by the CFPB. I just caution that these kinds of things are critical. And I've had a call with the regulator about this particular policy. I was on a group call, And, we brought up the question about disclosure came up that I mentioned by article and you brought up, just like you have to do fair when you have affiliated business arrangements as an originator with a title company or some other company you may
Sure.
have an arrangement with, or a real estate company through some sort of marketing agreement, you have to disclose those as affiliated relationships. Well, if you have a contractual relationship that says, I cannot do business with these two companies, I can get, a broker may say, look, I don't do business with every wholesaler in the nation, but
Right.
if you're contractually excluded to do business with a couple of companies because you have one of these other companies in your stable of wholesale lenders, should that be required to be disclosed? And I think that's a reasonable discussion. And if I was a broker, I'd be saying, man, I don't want any of this. I don't want this war going on. Let Dan Gilbert and Matt Ishbia fight it out in a ring somewhere. We'll all buy tickets and popcorn, and they can,
Sure.
whoever wins gets the punch at the end of the show. But when it relates to business, we have, we're splattering blood in the streets as it relates to our business, and I just think it's bad for them. I think it's bad for them all around, and I'm especially surprised for a public company that they would even want this kind of attention on them. I don't know any reason why you would want that kind of attention as a shareholder-run company that can be exposed to Securities and Exchange Commission oversight and other examples of looking into your business.
Yeah, agreed. Well, great insights as always, Dave. Really appreciate you being on the show. We'll have you back again soon, I'm sure. Guys, I'll put the links to the articles we were talking about down below so you can read those articles for yourselves. Dave, thanks so much. Appreciate you.
Thanks, Frank.
Appreciate your insights. You guys do us a favor, leave us your comments down below. Forward, share, and subscribe. If you're meeting us for the first time, we'll catch you later here at the National Real Estate Post. Adios.